Hello, welcome back to another video. This is Lab 8-3, Analyze Financial Statement Ratios. So for this lab, we're interested stakeholders of the firm needs access to real-time accurate financial data. Since 2011, stakeholders have used XBRL data to meet this need. So we're going to start off, we're going to open a web browser. I've already have my Google Drive open here, and I've logged into my Google account. And then in another tab, I have gone ahead and opened up another HTTP, and I'm going to go ahead and type it in just so that you can see. http://10euro.com/XBRL ratios. Should pull up the same thing I have. Yep, same document. I'm gonna go ahead and close this file. Okay, and we're going to make a copy file, and we're going to, I'm just gonna leave it as copy of financials and click OK. Okay, so we're actually gonna go ahead and dive into this worksheet and use it to compare some information for different companies. I'm going to go ahead and zoom out a little bit just so that we have a better view of all the information. So in this case, we're going to compare Tesla and their 2019 financials. We want it for a fiscal year. I'm going to go ahead and use all caps. And I'm going to go ahead and leave this to round to the nearest million. And we're going to compare them to Ford, not Facebook, just Ford. And in this case, General Motors. So I'm going to go ahead and click OK or enter here. Let me change these to lowercase. Okay, so I've gone ahead and input the information for Tesla, and I'm going to compare it to Ford and General Motors. So this is Ford, and we have General Motors information here. Their name is not showing up for some reason, so I'm going to try to see if I can get it to appear, but the most important part is that we do have their financials here. So their information is generated here, and I'm just going to keep a side note or a mental note that this information is for General Motors. Okay, so the first ratio that I will be, moving on, once you have the information, I'm going to go into their financing. So the financing ratios indicate Tesla's ability to pay its long-term debts and show financial leverage. So in this case, we see that Tesla's debt-to-equity ratio is decreasing. This shows that their liabilities are 26, I think it's millions but for this case, we're going to say 26,199, but since it's in thousands, most likely in millions. And their equity is 6,000. Therefore, we see that compared to previous years, either their liabilities are decreasing or their shareholders' equity is increasing to allow that number to decrease over the past 3 years. So, which is a good thing. You want less debt overall and more shareholders' equity. And when you're comparing it to the market, we see that Tesla has a lower debt-to-equity ratio when it's compared to Ford and General Motors, which once again is a good thing. Okay, so moving on to liquidity, it's also known as the asset test ratio. We can see that here This means, or this measures the ability of a company to use its near cash or quick assets to extinguish or retire its current liabilities immediately. So, a normal liquid ratio is considered to be a 1-to-1. So, if a company's quick ratio is less than 1, then it currently can't pay back its current liabilities. So, we see that I guess Tesla's here is increasing, nearing the 1%. So they're, which is a good thing. We want it to be closer to 1. The closer to 1, the better. Tesla, we see, is better off than Ford and GM. And now that I'm thinking about it, going back to the current ratio, we see that Ford is actually slightly better off. So I think I failed to see that 0.03 difference there. But yes, it is obvious if we see here the comparisons. The dew-point framework outlines the components that affect return on equity as a combination of asset management and profitability. And I'm taking that right here. So this formula allows experienced investors to gain insight into capital structure of the firm, the quality of the business, and the levers that are driving the return on invested capital. So by measuring and highlighting these underlying realities, it becomes easier to target. In general, return on equity, which is this ratio that we're going to see here, reveals how much after-tax profit a company earned in comparison to the total amount of shareholder equity found on the balance sheet. ROE is one of the most important indicators of a firm's profitability and potential growth. Unfortunately, we see that Tesla here, although it is improving over time, it's still a negative number, and we don't want that. So here, when we're doing a market comparison, General Motors is definitely doing better off. Profit margin of sales. Once again, this is net income over their sales. You definitely want net income to be over sales. Once again, we have Tesla in the negatives, although it is improving. We have to give them credit. It is still a negative number. Ford is kind of breaking even there, and General Motors is doing slightly above. So General Motors is winning in this race. Not that it's a race, but yeah. And then we have net sales over average total assets. And here we see that Tesla is definitely improving their numbers. Definitely had a strong growth here from 2017 to 2018. Their curve kind of flattened over from 2018 to 2019. So they're definitely doing better here compared to any of the other ratios, and they're the leading one compared to Ford and General Motors. So equity multiplier, we have assets over equity. Ooh, they're kind of that's interesting actually. It looks like they did well in 2018, and their numbers are going down again. So not sure what happened there, but when we're doing a market comparison, we see that Ford is definitely better off. That means their assets is beating their equity by quite a few. So the dew-point framework altogether takes this all into consideration, and we see that Tesla is in the negatives, which is probably not the best. I mean, the decimal overall. It's a very slight decimal though. Ford, I'm not sure you want a 0. You definitely want some type of profit or gain. And General Motors has positive 0.17. So in this race that is existing, General Motors is winning. So overall, we see that this sheet is just very helpful in analyzing um, three main companies. In this case, we're doing Tesla, Ford, and General Motors. And each page kind of breaks down each of the ratios and the different parts that are components for our overall balance sheet information. This is a great tool, and after having compared them, this is the end of Lab A3, Analyzing Financial Statement Ratios. Thanks for watching.